Well, let's welcome in our next guest. It's going to be George Kailas, CEO of Prospero.ai. We're talking retail investors here, George. When you take a look at maybe some of the action here today, I think one of the key things that kind of stuck out to me is that we've always had that old adage that retail traders, that's dumb money, right? You got to watch the institutions, you got to watch the hedge funds. But if you look at the performance from retail traders this year, it's been one of the best years ever in the retail side. They were buying the dip in April a lot quicker than institutional instead of hedge funds. What's your take here on the retail investor and how they handled 2025?
I mean, the market has changed. When I first got into it, I worked at the Value Investing Center when I was 16, worked in my first value fund when I was 17, and I've gotten a front row seat to this shift. I mean, we saw retail make up as much as 35% of the market in April 2025. And with all of the algorithmic trading in the market now, we are getting a lot of algorithms that follow that retail momentum. So it's kind of like retail and institutions are a certain block now, a certain very powerful block. And that has created a change in the market where retail investors can succeed and different kind of valuations are going to work. And that's just the way the market works now. I mean, there's still people, a handful of analysts that have Tesla at sub 50 price targets. And I think they're going to be waiting a long time for that to happen.
Yeah, that's right. Maybe the retail investor has become the smarter investor, but at Prospero.ai, you guys are, monetizing AI right now for that retail segment of the traders, of the playing field of the market. And you guys are what type of product are you guys looking at when you look at the retail trader and the advantages that maybe your app gives?
So yeah, we have 10 signals that can be used by traders or investors. We have 5 long-term and 5 short-term signals, and actually some of the traders find the long-term signals more helpful to them and vice versa because that's not data that they're looking at as much. And we really try to simplify it into these 10 signals. We look at things like social sentiment, so we're trying to coalesce things like retail demand and then net option sentiment, which is our most popular metric, very powerful. We predicted a number of market swings this year with our QQQ SPY. Net option sentiment, and that's actually isolating institutional options demand, netting out the call and the put side, scaling it 0 to 100. So we have powerful metrics leveraging AI that really simplify things, make them more digestible and actionable. And it works for retail investors and it works for us. We are beating the market significantly the last 4 years with the picks we give away for free in our newsletter.
Yeah, if you're looking at the flows and the headline risks that are out there in news flow that's out there on a minute-by-minute basis, so you guys are setting the tone with that. When you look at the different narratives here in the markets moving into 2026, do you expect a little bit more volatility, more of a stock pickers market where retail investors just can't buy the SPY and think that they're going to get another 17-20% gain in 2026?
Yeah, absolutely. I think that it's going to be a stock pickers market, and I think you have to look at Nvidia and Broadcom earnings, especially recently. And Nvidia had a fantastic earnings, double beat, guided up, and partly for some macro news, actually finished down on that day, which is crazy, but it shows how the demand and the excitement around AI has really changed. I think Michael Burry's part of that. I think there's a lot of things at play there. But then if you look on Broadcom on the other side, they got hit, estimates as much as 15 to 21%, depending on your timeline. And they had a double beat. They had good guidance, but the problem with them was they guided down on margin. Their product mix was changing, more automation. They're using more third-party specialized products, which is also a trend. And even just looking at that alone and the way the AI trade is changing from it just being like everything up, every earnings response great, I think that right there is the story of the increased volatility that we expect in 2026.
Yeah, the bar is high on those stocks going into the reports. I'm looking through them as they're coming out immediately, and I'm going, hey, what else can these companies do? And the stocks are selling off pretty significantly, but the bar is high on those. The valuations are elevated in them. And I think everybody's kind of concerned about moving into 2026 that we're going to see maybe a topping out in maybe the tech trade here, George. I mean, as far as maybe what you guys are inputting and what you guys are seeing on your side, do you expect a little bit more volatility in 2026? And traders and retail traders should be, aware of that.
Yes, we do expect it, but actually, in one of our last letters, actually our last letter of the year, this last Sunday, we write a letter every Sunday that kind of looks at some specific stock picks as well as some narratives. And what we actually like are some growth names. We mentioned, I was actually on the Schwab Network a couple weeks ago. I mentioned ASTS, LEU, and I was actually on 12/16. If you go and look at the charts from 12/17 on, I think some people were sharing that, especially those communities. Both of those stocks did very well, and we like those stocks because we like what's going on with nuclear, space, broadband. There's huge opportunities, I think, in those. And ASTS and LEU have very strong market positions, and unique market positions, I would say. So that's the kind of thing we're recommending. And we're also looking to pair growth names like that with something like real estate. We see a lot of macro issues with the real estate market. The listings, the supply and demand is down in the real estate market. And we think that if there are rate surprises, those stocks are going to be hit perhaps even harder because of the actual, growth concerns in those industries. So that's one of the things that we're trying to help people with the volatility, just being like, hey, if you're going to have growth names, I would think about pairing some real estate with that, because I think that balances out the risk pretty well. Real estate shorts.
Yeah, real estate basically been in a bear market almost compared to other segments within the markets. Looking ahead to 2026, George, what are your keys? Do you have like a word for 2026 for retail traders out there?
I would say volatility. I mean, we hit on that volatility. I was going to say watch closely. People need to watch. We have these net option sentiment signals. Like, we're not in a set it and forget it market. I mean, sure, if you don't have time, say buy something like Vanguard Total Return. And we always encourage people to be very realistic about the time commitment they can make. But if you want to be in the stock pickers money market, you have to be prepared to look at, things like our net option sentiment, other market signals, technicals. You don't have to be watching charts all day, but you have to be prepared, if you're going to do as well as you can, to be willing to try to time the market a little bit. Everybody says don't try to time the market, but I would say if you're not going to try to time the market, don't buy individual stocks.
Yep, I'm a trader, George. I know exactly what you mean. Can't time it, but maybe you can profit from it. That's the key, I think, moving forward. All right, George, Happy New Year. Thanks for joining us today. That's George Kailas, CEO of Prospero.ai.